Welcome back to the channel. My name is Vandell. I'm the co-founder of Black Swan Capitalist. So today I want to address something that's been overlooked in discussions around the Federal Reserve and its impact on the financial markets, especially in the context of crypto. And I'm talking about the recent Fed interest rate cut, the 50 basis point interest rate cut that just took place on September 18th. So I see a lot of analysts and economists really highlighting the negatives of the interest rate cut. And it's interesting because why aren't they talking about the positives? Sure, there is negatives, especially associated with the US dollar losing more buying power and devaluing even more. The US dollar will face consequences in the long run, but I'm referring to asset prices based and dominated in US dollars. So I don't see a lot of people talking about the positives, especially given the fact that we have historical proof to show there are positive things that happen within the market, especially to asset prices increasing. In this video, I'm going to show you some examples of historical data when this has happened and the outcomes and what took place in the future. So we're at a critical moment right now, and I believe that this recent Fed rate cut is setting the stage for a very strong cryptocurrency market as we head into 2025. But no one seems to be talking about this. Let me break it down. Why is nobody talking about the upward rallies after the rate cuts? Every time the Fed makes a 50 basis point cut, and I'll list a few examples, there's usually a significant correction in the stock market and in the markets in general. And yes, things often do get worse before they get better. But here's the key. After each major correction or market crash that took place after Fed rates got slashed in half, the market rebounded with powerful rallies afterwards, sometimes often lasting for years. So this is a pattern we've seen time and time again. Despite downturns, the long-term trend of the market continuously moves upward in the long run. So I'm going to give you a few examples. In 2001, the dot-com crash, the dot-com bubble, the Fed cut interest rates by 50 basis points. The market kept falling for over a year, bottoming in 2002 before starting a new strong rally. Now remember, between 2001 to 2002, around that time, we didn't have this thing called quantitative easing where they can just inject more money on a substantial scale into the markets to artificially inflate them. So they didn't have that back then. The QE came in 2009 after the 2008 financial crisis. So keep that in mind when we're talking about these Fed rate cuts before 2009 and 2008. Now the second time, well, there's many times, but I'm just listing a few. In 2007, the subprime crisis. The market kept dropping after the Fed cut rates by 50 basis points. It bottomed in March of 2009, then took off on a major rally. And it's interesting because that's when quantitative easing and QE came into the game. And in 2008, the financial crisis, the market continued falling after another cut, which was 50 basis points, bottoming in March of 2009 before a strong recovery. Now again, in 2020, the market dropped sharply after the cut, but quickly hit bottom in March of 2020 and then rebounded extremely fast. Because remember, after 2009, we had this thing called quantitative easing, QE. They could give it any name they want. At the end of the day, it's money that's being put into the system, into the market, into the economy. And this is what drives markets. It's liquidity. And just recently, the other day, September 18th, 2024, the Fed once again cut interest rates by 50 basis points. Naturally, we can expect volatility in the coming months. And personally, I'm expecting a lot of volatility between now and election time, especially with the elections coming up. I mean, this is pretty normal. We've seen this happen many times in the past. Elections are approaching, and that's typical. And it's important to note that historically, Q3 has always been tough for financial markets, with a lot of volatility and a really bad time of the year for markets in general. And I wouldn't be surprised if we see a black swan event or some sort of correction or a major crash before markets stabilize and start rallying again. Anything's possible. I'm not telling you exactly what's going to happen. I'm just saying the probability of that happening is a 50-50 right now. You just never know. Regardless of the short-term movements, this rate cut could actually set the stage for a massive bull run. And that's exactly what I think is happening right now. I think we're just going to have a lot of volatility in between now and elections going into the end of the year. And it's interesting because the global M2 money supply, which coincides 100% with every bull run we've had in the last 4 years, that global M2 money supply has been growing. It's just getting started. So what are the odds they decide to cut rates on September 18th? Just as we're approaching a big bull run in the crypto market, and at the same time, the global M2 money supply is starting to grow again, which ultimately makes its way back into the economy and into the markets. And it's just very interesting to see from a visual standpoint on the charts, because you actually see that there's no way this is a coincidence. Now, particularly in asset classes like crypto, I think it's going to be extremely big, especially as the global M2 money supply continues to increase. But here's something crucial. Rate cuts alone, they don't determine where the market goes in the weeks or months ahead. Okay? In the last two major Fed rate cuts that took place, the Fed cut cycles, we saw the S&P 500 drop almost 50% in the short term. Rate cuts are simply the Fed's way of reducing economic stress, and the real long-term direction of the market will depend on key factors like jobs, data, inflation, and most importantly, the global M2 money supply, which is something I always talk about because every time it increases, that's the same time we have our bull run every 4 years. And you can see it for yourself. The global M2 money supply is the key driver of the crypto markets. Now, why is nobody talking about this tool, quantitative easing? As I said, prior to 2009, prior to 2008, we did not have quantitative easing. So when we did have the 50 basis point rate cut in 2001, another one in 2002, markets reacted extremely different to how they would react today and after 2009. So they have this life support that they can inject into the economy. It debases your fiat currency, which means your buying power continues to shrink and diminish, but asset prices increase. So that's how it takes place. And quantitative easing is essentially just printing money. It's a tool the Fed uses to pump liquidity into the economy. It lowers, borrowing costs and floods the system with cash, and historically has led to market booms every single time the global M2 money supply liquidity increases. Now, when the Fed introduces QE, it's not just stocks that benefit them in the markets. It's in general, stocks tend to skyrocket, and so do other assets such as gold and specifically cryptocurrencies and digital assets. But no one is connecting the dots between QE, the rate cuts, and how these policies can fuel growth in emerging sectors and especially in crypto. And guess what? As I said, the global M2 money supply has just started increasing again, and this matters because it's the main driver of all markets. And there's nothing else that really drives the markets right now except the liquidity. And every time it goes up, the markets, they rally. So in my opinion, I believe that because of the rate cuts, you're going to see a lot of money move out of money markets, Fed funds, and it's going to move into riskier assets that provide a much higher return on investment. And that will be your cryptocurrencies. It's a safe place to move, aside from gold, because the returns are the highest compared to any asset class out there. Crypto offers the highest return on investment compared to traditional markets. Even though it's becoming volatile, it's quickly becoming the go-to alternative for institutional investors, sophisticated investors, and retail investors as well. And after each Fed rate cut, capital often flows into asset classes that offer the highest returns, and that's cryptocurrency. And crypto is now seen as a viable, high potential space, in my opinion, and in the opinion of many traditional investors. And with that added fuel, which is the QE, crypto could be, in my opinion, on the most explosive growth that we've ever seen in history. So, in summary, history shows us that after every rate cut, the market may drop, and it does drop usually first, but it always bounces back stronger, with rallies often lasting for years and for many months. Now, with the Fed cutting rates, potential quantitative easing on the horizon, and the crypto market offering unprecedented returns compared to any other asset class, we're looking at a perfect storm for growth as we head into 2025. And again, crypto is no longer just an alternative. It is a go-to safe haven along with gold for many investors. And this is the narrative that Larry Fink is pushing from BlackRock as we're facing the US debt crisis and a dollar crisis. So I hope you guys enjoyed that. If you like this video, let me know. Comment, like, subscribe, and I will continue to make more of these. Thank you.